For those of you that were sitting on the fence and waiting to refinance, expecting that the interest rates were going to fall, knowing that the Fed's cut rates, unfortunately, that just was not the case. After the Fed's cut the rates, they've done nothing but continue to go up. Is it long-term? No, it's not long-term. The problem that we have right now is that the consumer confidence is low. And to be honest, I feel the same way. As we move forward and we are post-election and post-2024, I think that as policy starts to come into play with the outcome of the election, that we will start to see a more stable economy going forward. Right now, despite the job reports that we've talked about, the numbers look good, but we don't hear anything that says that it is good. Now, there are people going to work, making money, but there are a lot of people that aren't. Their hours are cut, their pay's cut. Why? Because employers don't have the extra funds to be able to afford continuing to do so. So let's take a look at the market. You'll see on the top left corner a 30-year bond note. And this was from yesterday, where we lost close to 60 basis points in one day, which is a pretty dramatic shift. So since the rates dropped to the lowest numbers in the beginning of probably late September, early October, we have now risen by 0.75% or close to 1 point in interest rate. So 60 basis points translated in a loan to a consumer, be it that you or somebody that you know. If it's 60 basis points, let's just make it a simple number, 50 basis points on a $500,000 loan is $2,500 more in cost to get that same exact rate. So that's a pretty dramatic shift for somebody. You pay the $2,500 to get the same rate that you were going to get in late September, or you take a higher interest rate and a higher payment. The good news, my friends, is if you look a little bit closer at the 10-year note, which is a good ballpark figure to use to determine where the 30-year fixed mortgage rates are going, you'll see here that in 2022, that the interest rates rose late October. Now, we weren't in an election or anything like that, but there are certain things that happen from a policy standpoint in November every year, despite it being a bigger election like every 4 years. In 2023, you will also see the same thing. In 2024, the exact same thing has happened. And just after, this bump in interest rates where it did go up, we started to see them fall again. So let's cross our fingers and hope that that's where we're going to go. The expectation still is that the Feds are going to lower the rates in November and in December, but a lot of that's already built into the market. So if I were taking a guess, I would say that we're probably not going to see some big adjustment until the first and second quarter of 2025. Now, don't let that hold you up from purchasing, but if you're considering refinancing, just be on the lookout and making sure you're staying in close contact with somebody like myself. Otherwise, have a good one. We'll talk to you guys soon.